Hi, it's Justin from Orange Umbrella. I thought I'd do something a little bit different this time for the budget review. It's been a really turbulent time of budget reviews recently. We seem to have, the government have chopped and they've changed and they've done all sorts of things. And I think sometimes it's easier just to maybe explain some of the things that have happened with the budget and hopefully get those points across a bit better for you, because I think there's a lot of confusion because there's been so many U-turns with it. So I hope through the medium of video that's going to come across as well. So to kick us off, there was a change to corporation tax. So from April of 2023, there's going to be a rise in corporation tax. If profits remain under £50,000, you'll continue to pay 19% corporation tax. There's going to be that sort of a tapering system. So once you get up to £250,000 a year, you're going to pay about 25% in corporation tax. But that's going to be sort of 1% incremental increases. We haven't seen the full details. I've had a bit of a look around the HMRC guidance notes and things, and I think they're still sort of finalising their plans to that. So we haven't got quite the full details, but we're sort of expecting a kind of a 1% step up for each of those 50,000s as you get up to £250,000. The next thing is, unfortunately, it's bad news for those who are paid via dividends. The government are sort of reducing the tax-free allowance on dividends. So a lot of us have been used to, myself included, £2,000 of tax-free dividends, and then we were paying tax after that point. That is going to be reduced down to £1,000 from April of 23, and then a further £500 reduction, so a total allowance of £500 for the 24-25 tax year. So it's a bit unfortunate, that one. So just plan that into your tax planning. Think about that you are going to have an extra amount of tax to pay for the next year and the year after as well, and then hopefully you should be more accustomed to the system. The other good news is that the annual investment allowance has been sort of what the government have actually said is that they're making the level that they've got a permanent level. So when we buy assets and capital equipment, we've got £1 million that we can spend on capital equipment and get a full allowance for tax on that, which is absolutely great news for business. And I'm hoping that is actually going to be a permanent change and we can see a bit of permanence to that. All the years I've been in business, for nearly 20 years, there's been a lot of fluctuation in that level. Don't forget as well that the super deduction, where you get 130% relief, that is still going until the 5th of April of 2023. So make sure you time your asset purchases to get the most out of it as well. That only applies to limited companies. Fortunately, most cars that won't apply to as well. But normally for buying computer equipment, office furniture, our usual asset purchases, then yes, absolutely, that's going to work. Business rates, next point, is just keep an eye on what's going on with your business rates. There is a bit of a reform going on at the moment to do with the rateable values on business premises. The government have announced sort of a package to support small business owners, which is going to be delivered over the next 5 years. But what that could mean is that then there is a point where you are going to see increases in your business rates. So maybe just pay a little bit more attention to those rates bills when they start coming in. The next batch will obviously start coming out in April time. So maybe just do a comparison where your rateable value is. Have a look at those small business multipliers as well, what the reduction is you're getting in small business rate relief. You know, it might be a point to actually check your premises as well and make sure that the understanding on those rates bills is actually correct. We've been through a period of quite low rates. So now is the time to sort of maybe have another look at those rate bills and just see what the future might hold as well. It's very difficult for me to give you any more detail. Everyone's business premises are so different as well. There is a range of packages, though, that are coming for the high street. The government have said that they want to support the high street, so that's probably where the biggest savings are going to be seen as well. If you're a higher or additional rate taxpayer, just pay attention to the threshold. That the additional rate of tax used to kick in at 150,000, and that level has been reduced down to 125,000. So if you're in that position, just bear in mind that you're going to start paying 45% tax at 125,000. A couple of kind of key points: make sure your pension input is right. Check how your pension is being dealt with. If its tax is being recovered by the pension company at 20%, don't forget you need to recover that tax as well. The next one is freezing of thresholds. There's been a freezing of the tax thresholds. A lot of people dub this as a stealth tax. It's inflation. Warren Buffett described it as cancer on companies, and in some respects that's also can apply to tax as well. The government will collect more tax just by freezing those thresholds. So while we are seeing some tax increases, those thresholds for your personal allowance, where you start paying 40% tax, they're just remaining the same. So it's obviously, if the cost of living is going up, you've got potentially less disposable income because it's going to by way of tax. So do think about how you can combat that. And what you might be able to do, just reducing out general household expenses, things like that, making your money go further will maybe help protect you a little bit and do all you can. Capital gains tax. This had been rumoured for a long time that there was going to be a big reform of capital gains tax coming. Now it's going to arrive from April of 2023. That tax-free threshold is going to drop from £12,300 down to £6,000. The following year, it's going to drop down to £3,000. If you've got maybe property transactions where you're going to attract capital gains, do try and time those if possible to get through with April. In particular, property take a long time to go through. The UK average for a conveyancing transaction at the moment is 12 to 24 weeks, so you don't have much time to plan. It's the same when it comes to stocks, shares. If you think you've got any big gains there, it might be a good idea to crystallise those gains before the end of the tax year as well. Employment allowance. This was a good bit of news that employment allowance is going to remain at £5,000. So there's a £5,000 allowance for small businesses employing people that you're going to get towards your employer's national insurance bill, and that's staying. Not sort of really what was announced in the budget, but I just wanted to mention about VAT. There's a big reform coming next year in terms of VAT penalties, and it's going to be done on penalty points. It's actually a welcome change from what I've seen from the initial guidance notes that have come out. I think it is a much kinder system. I hated, and I really mean hated, the surcharge system. It could be very, very unkind to businesses that are really struggling to make the back payments, and it could get really, really excessive. I think it is a fairer system, so maybe just have a quick look at that. If you are in financial distress and struggling to make those back payments, having an understanding of the penalty system is always a good move to make. Anyway, that's my very quick recap of the budget. I hope you've enjoyed it in video format, and I might do the next one the same. All right, thanks very much. Bye.